What's up, YouTube? Welcome back to another episode of KJD Investor. This is yours truly, KJ. And without further ado, let's go ahead and hop into the portfolio. Now, I know we got a lot to cover, y'all, and I've been meaning to make a video for you guys, but no excuses. Here's the meat and potatoes. I value your time. I'm not going to waste your time. So we're going to go ahead and jump into it. The portfolio right now in the investing account, we're looking at, first of all, we're looking at the Robinhood account. This is the updated version of the app. If you haven't updated, you wanted to know what it looked like, here it is. This is the new interface. It lets you toggle between investing account at the top, traditional IRA, spending account, joint account, things like that. Right now, I don't have anything in my spending account because I usually don't put anything in there unless I'm planning on spending. And then if you do plan on spending, look at the recent history. It'll say decline for a lot of it, but that's not true. That's the history. That's not true. Robinhood has security measures put in place for your money. So the decline thing just lets the app know that you're trying to use your debit card, and then it'll send you a message and tell you, hey, if that's really you, go try it again. We'll make sure your card's unlocked and we'll make sure it goes through. And that's all I do. I just make sure that my card, I let them know it's me, and then I do it again. And, I'm able to pay for the things that I'm able to pay for through my Robinhood debit card. Anyway, that's the new interface. I just want to kind of go over there with you. First things first, guys, the account sitting at $71,296.18. The traditional IRA is at $52,036.58. We're down in the traditional IRA over $1,000. As a matter of fact, it's looking like almost $1,100, a little over $1,100. In the investing account for today, we're down $55. I know yesterday it was saying the same thing, over $1,000 something we were down. So in the buying power, I got $3,003.15. We ended up getting paid out from the APY on Robinhood Gold. So that's something that kind of helped us out in the crunch time. Also, guys, I got a lot of options going on. Now, what I want to talk about real quick before I jump into my options is if you had the SoFi play, if you did the SoFi play that I've been talking about on this YouTube channel for a while, congratulations. SoFi had earnings about a week ago. You've seen the price skyrocketed even after the earnings. And then after that, it did make a dip. SoFi dipped. Here's my option for SoFi. Right now, the stock is sitting at $21.15. It's come back down even now because the whole market rather is coming down, and we're going to discuss. Sorry about that, guys. Continuing on, somebody tried to call my phone, but they got blocked. Anyway, if you tried to do the SoFi play, if you was investing in SoFi at any point in time, congratulations, because you made money. Now, the dip happened after the earnings report because it's a regular stock territory correction on the stock. So that's basically what that was. It did make a dip and come back down. I still have my option strategy for SoFi, where I'm selling $19 puts for SoFi, 8 contracts right here. I'm doing 8 contracts from SoFi, $19 sell puts, and I got paid a healthy premium, $456 premium for that particular play. I'm up right now, total return, $248. That's a 54.39% return in this position. So 8 contracts, that's 800 shares of SoFi. Every one contract represents 100 shares. So, yeah. So now, listen, I'm still within my option plays. My options don't expire till August 15th. More on those later as we get closer to the expiration date. But as of right now, I did, like I said, I wanted to cover that SoFi evaluation. The Mag 7 Q2 earnings we just went through all of those. Amazon absolutely killed it. Google killed it. Who else we had? We had some more Mag 7 companies report, but everybody who reported, guys, Meta, that's who it was. Meta absolutely killed it. Google absolutely killed it for Q2 earnings. They did kind of take off for a little hot minute. And then we got the news that everybody's feeling the crunch of right now. Everybody's portfolio is falling under the news of more tariffs. And not only that, but inflation reports coming out, PCE reports coming out just the other day. So now this is what, August 2nd, August 1st. We got the June inflation report, the July inflation report came through. And guys, I'm gonna just be honest, it did not look good. It did not meet expectations for investors. It did not meet the expectations for the economy. The jobs report got revised down, saying in June, they said we added 147,000 jobs to the economy. In July, it really got revised down to only 14,000 because July, they said, no, those numbers are wrong. ADP came out with their own jobs report numbers reporting that it was over 36,000 jobs lost. So we got the current administration that's in office right now, 47, and his current administration tweaking the numbers on the job reports. I'm just saying they're tweaking the numbers on the job reports. Factual news articles and factual news reports have come out to reveal the true numbers of the economy, and it's not up to par to what the investors were looking for. That's why you see this big sell-off in the market today. That's why, and more tough tariff talk, TTT, tough tariff talk. More tough tariff talks from 47 has also awakened more investors' uncertainties. And so that's why there's a big sell-off in the market right now. You see a lot of things in the red. I'm going to show you one in particular, Archer. Archer right now is going for $9.64 a share. I'm selling puts on Archer at the $11 strike price. Yeah, it was $11 strike. I got 10 contracts. 10 contracts of Archer, 1,000 shares, right? But look at how far down it has went. Total return, negative $710. I got to dig myself out the hole with Archer, guys. 10 contracts. But it's okay. That's the price you pay when you're selling options, man. You're trading options. That's the price you pay. And it's not bad because instead of a buying strategy, I use a selling strategy, and I collect premiums on it every single time. So let me show you what I'm talking about. Like I just showed you in the SoFi example, Archer paid me a premium right here. Sale put July 23rd of $930. I received $930 directly in my account when I did this sale put on Archer back in July. So it's okay to be assigned. I think I'm gonna just let this one run out, let it be assigned to me because it's absolutely in the money. I'm gonna let this be assigned, collect my 1,000 shares of Archer and Innovations, and I'm gonna continue to sell cover calls on it. And I'm just gonna, month by month, I'm gonna sell cover call, keep collecting that income, keep collecting that premium. Also, we're gonna take a look at Walmart. Right now, I sold $98 cover calls on Walmart. Walmart is actually in the money. It's $98.40 today. And my break even is $99 in Walmart. And right now, Walmart is at $98.40. So what that means is I have 114.14 shares of Walmart. Market value is $11,231.49. I have a total return of $4,500.44 in Walmart, 66.86% return. If I allow this contract to expire on the 15th without rolling my position, my shares will be called away. 100 shares of my Walmart will be called away, and I'll collect that. You see that total return, just about 100 shares worth of that I'll collect directly back into my buying power. So it's not a bad trade-off, but at the same time, I actually like my Walmart position. I have a good average cost of $58.97. I like my Walmart position, and I'm not looking forward to selling my shares of Walmart. So I'm going to end up rolling this position before August 15th or on the day of August 15th. I'm going to end up rolling that position because I'm not losing my shares. We got Big Bear. I sold $6 puts on Big Bear. Big Bear is $6.45 right now. 12 contracts. I also got compensated Hampson for this. $300 premium for doing this back in July. And right now, excuse me, right now Big Bear holding pretty strong at the $6.45 mark. Sweet Greens, we got Sweet Greens. Sweet Green has dropped in value, guys, back down to $12.02. I'm selling Sweet Greens $18 cover calls, $18 cover calls. I got 4 contracts right now. I'm up in this position total $532. That's a 91% return. Also, I got a sweet premium deal for putting my Sweet Greens on the line. I got a $584 compensation for putting my Sweet Greens on the line. So I made $584 for making the contract, and I'm also up a total return of $532 on the same one position, which is my 400 shares of Sweet Greens. So Sweet Greens is doing this thing for me. I appreciate that. Still got my crypto holdings, my Doge, Ethereum, Avalanche, and then I still got my Bitcoin ETF, IBIT, where I continue to invest in Bitcoin. Also got my 2.63 shares of Meta. I continue to hold Meta, even though I know I'm supposed to sell it back to get the money so I can continue putting it into options and using it to make more and more trades because I only got 2 shares. What's the point of having only 2 shares of Meta? Well, I want exposure to the stock. Well, you have some ETFs like XLC, and XLY will give you exposure into Meta and Tesla. Then the other one will give you exposure to Google and Amazon. So, you know, I wanted direct exposure, not just from the ETFs. The ETFs are good, don't get me wrong, but I want that exposure into the actual stock, especially really good companies like the Magnificent Seven. Google right now is sitting at $188.21. Apple is at $202.29. Coca-Cola is at $68.80. Believe it or not, I would sell options on Coca-Cola, but the premiums are just not there. So I'm not going to worry about that. Now, next, the traditional IRA. I'm still holding on. Buying power, $4,523.97. I'm still holding on to Hims and Hers. I sold a Hims cash secured put for $49.50. Hims is dropped to the price of $62.52. So we're still out of the money, very much so out of the money. I got $146 return right now, so far. And I also got paid a juicy premium for coming up with this contract, $305. And what I would do, just continue, when it expires, and if it expires out of the money, I would just continue to sell put options on Hims every month and keep collecting that premium. Also, another stock that your boy selling puts on is Palantir. Palantir is like the granddaddy, big boy stock of them all right now. Palantir is shutting it down in the options game. Right now, Palantir is trading at $155.15. Also, I sold puts on Palantir at $135 strike price. One contract, because these contracts are obviously expensive. I'm up $65 total. I got paid for this contract $395 just for saying I would do it. $13,500 is into the collateral. $13,500 is what I had to put up for collateral just for one individual contract. So let me see. Go here to Palantir. Right now, like I said, $155 a pop. I'm waiting for Palantir. If it drops, I'll be ready for it. I'm going to have some dry powder on the sidelines after August 15th. I have some extra cash on me. See right there, collateral 13,500. So yeah, if Palantir want to drop to that 135, I'll be more than glad to pick up over 100 shares right there with Palantir. But I'm just trying to get more exposure into the stock. I got 26.79 shares of Palantir. Total return, I'm up $2,122.70, or I'm up 104.29%. Absolute game changer. You're talking about a company that causes people to get rich and get into wealth. Palantir is definitely it. Now, I learned my lesson about selling covered calls on this particular stock. Now, this is the silverback gorilla in my portfolio, NVIDIA. NVIDIA has also dropped to $172.51, but that's okay. I got 126.11 shares, market value $21,755.84. Average cost is $109.98, and total return, I'm up right now $7,885.27. That's a 56.85% return on investment. And like I said, I learned my lesson about selling covered calls on NVIDIA, because this stock continues to run and run and run. Whether we're in a bull market, a sideways market, or even a downward turn market like we are right now, don't be fooled. NVIDIA can switch it up on you at any time. So it's really, you really just got to watch what NVIDIA do. MicroStrategy, I got 9.86 shares, $369.01 is the strike price for that. Also, doing some option trading with MicroStrategy is really, really good for the premium. So just be mindful of that. All together, guys, I got $123,000 right now, $331.78. The market is definitely crunched in right now. It's super low. Excuse me. It's super low due to, like I said, tough tariff talk by 47. Also, the inflated numbers and job report numbers coming back worse than the expectation. So what does that spell out for me and for you as investors, guys? That means we are to simply get in position with our investments. Once August 15th comes and goes, and I'm out of these option trades and everything expires, whether I'm assigned or whether I get my collateral back, I will be ready for whatever the market brings next. I'll be ready to buy the dips, because historically speaking, October is usually one of the roughest months for the stock market. I know we're in August, but just hear me out. After August, we got September. September historically is a rough month for the stock market. I know last year it was. So September and then October, I think these next 2 months, guys, it's going to be a time or a chance that we have to really put our money to work purchasing great stocks at big bad discounts. And I'm talking about transferring wealth to ourselves. This is the time to do it if we're going to do it. So you guys, don't be weary. If you're following the channel, be looking for more updates and videos, because I'm going to be documenting every step of the way of the journey. We got to get to that 150K, 200K, 500,000, and then to the million. If you have any kind of questions, comments, concerns, you already know what to do. Drop it down in the comment box below. Until next time, this is KJ, the investor, signing off. Over and out. Peace.